Okay, in this video, what we'll do is we will now discuss financial statements and ratio analysis. Okay, so in this video, we'll also look at the case of Jollibee. We are going to analyze the financial statements of Jollibee. Okay, so just as a review, there are 4 key financial statements, and financial statement analysis and financial ratio analysis deals with the analysis of these statements. Okay. So first is the income statement. As you know, it provides the summary of the firm's operating results during a specified period. So since it shows the operating results, it shows the revenues and expenses of a firm and how much profit was generated in a period. Okay. The income statement also shows information on what's called the EPS, or earnings per share. And based on the word itself, when you say earnings per share, it's how much peso of earnings was generated by one share in the company, or one common share. Okay, so if, for example, you see that the earnings per share is 6 pesos, it means one common share is attributable to 6 pesos of earnings. So essentially, that's what the EPS is. Okay. You can also look at the dividends per share, although this is not in the income statement. It's not explicitly included in the income statement. And it shows the dollar amount of cash distributed during the period, for each outstanding common share of stock. So usually you've got earnings per shares. For example, the earnings per share is 6. Okay. And for example, the dividend per share is 1 peso per share. It means that if the company earned 6 pesos per share, but declared dividends 1 peso per share, it means that 5 pesos were retained in the company, right? And therefore, 5 pesos out of 6 pesos, so that's 80 something percent, right? That is the retention rate of the company. The portion of earnings that is retained, that's the retention rate. Okay? Yung piso over 6 pesos, that is called the payout rate, or dividend payout rate. Okay? Aside from the income statement, another part of the financial statements is the balance sheet. So it summarizes the firm's financial position at a given point in time. So by financial position, meaning value of assets at a certain point in time, liabilities, and equity as of a certain point in time. Okay. Assets and liabilities are frequently categorized into 2: current assets and current liabilities, long-term debt or non-current liabilities, non-current assets, and equity. Okay. So we won't review it one by one anymore. Okay. Another portion or component of the financial statement is the statement in changes in equity. So it shows the changes in equity in a certain period of time. What are the potential sources of changes in equity, as you have learned in 99.2? Okay, there could be infusions of cash into the company, or capital. There could be net income, so that increases retained earnings. There could be dividends and other capital withdrawals. And all of these changes are included in the statement of changes in equity. The statement of cash flows provides a summary of the firm's operating, investment, and financing cash flows. And it reconciles the balance of cash and cash equivalents in a period of time. Okay. So as you know, operating cash flows are cash flows generated from the business, meaning business operations. So when the cash flow is positive, it means that operating cash flow is positive. It means that the company is able to generate its own cash that it can use to invest in capital, invest in other assets, or pay down debt, or pay back as dividends of the company. Okay. Investment cash flows are related to cash flows related to fixed assets. So cash flows for selling fixed assets, that's part of investing activities. Buying or building fixed assets, that's part of investment activities. And lastly, financing cash flows refers to cash flows related to long-term sources of financing. So for example, loans are part of financing cash flows, right? What else? Capital infusions are reflected in the statement of cash flows, specifically financing cash flows. Dividends are also reflected there. So therefore, financing cash flows represent transactions with sources of capital. Okay? And those are all included in the statement of cash flows. The last and very critical component of the financial statement is the notes to financial statements. The notes are explanatory notes. So usually what you'll see is that in financial statements, there are references to notes where further explanations are provided on the number that you see in the face of the financial statement. So it's very critical that you also read the notes. You learn a lot when you look at the notes. Okay? Okay. Now that we have reviewed that, let's proceed to the objective of financial statements analysis. Okay. So stockholders and creditors use financial statement analysis to predict expected returns or assess risks related with those returns. Okay. Because financial statements provide financial information, so it's a wealth of information for stockholders and creditors. And the output of financial statements may be used or analyzed further so that it can give more insights into their investments in these companies. So it can be used to predict returns, to assess the risk of the company, or overall just to check the financial health of the company. So that's something that they can easily see from financial statements. And the tools of financial ratio analysis will provide them with an organized way of analyzing financial statements. Okay. Creditors are, of course, concerned about liquidity or its ability to pay current obligations. And they're also concerned about long-term solvency or the organization's ability to generate enough cash to repay long-term debts as they mature. In other words, for creditors, their main concern is really ability to pay. And so that's something that you can also glean or determine out of the financial statements of a company. Okay. Now, other parties might have different objectives. For example, if you're a member of the union, you might want to look at the financials of, or if you're the president of the union and you're trying to employees union and you're trying to negotiate the like the benefits for union members. Okay, financial statements of a company might be able to provide you with information, right? Pwede mong sabihin na, oh, ang dami na po nating savings sa travel. Baka some of those savings pwede nating i-channel sa employees as part of their packages or part of their benefits. So, and that's something that you can get out of financial statements. If you're a regulator, for example, you also have information from financial statements that you can gather. If you're a regulator, you can check if the company you are regulating is having too much profit or excessive profit. No? Or if they have transactions with related parties. What are related parties? Edi yung mga kamag-anak nila, for example, right? They have transactions with those. Nakikita sa financial statements yun because related party transactions are required to be disclosed. So just by reading the financial statements, you'll know a lot about a company. And therefore, for a regulator, that probably is an essential information, no, na makikita sa financial statements. Okay? So in our case, our example here is Jollibee. You know, Jollibee is a very strong and stable company. It's one of the biggest companies in the Philippines, especially in the food market or in consumer goods market. So, and of course, like just like any other company, they had some difficulties last year because of COVID-19, right? So, which is understandable. Now, let's see what was the impact of COVID-19 in their performance in 2020. So in the next slide here, medyo maliit yung numbers, but you can refer to the PDF files that I have uploaded in our group. Okay. So here is the summary of the historical financial statements of Jollibee Foods Corporation. So let's just try to pick out some numbers, based on the trends that we can see. Okay. So here's the balance sheet. So if you looked at 2020, kung titingnan mo yung cash and cash equivalents, for example, looks like wala silang problema sa cash if you look at the balance, right? Because they were able to maintain this amount of cash. Okay. So looks like good news, right? If you look at short-term investments, paiba-iba naman. So, maliit lang naman yung amount. So that's probably not significant. One thing that's significant is this, financial assets at fair value through profit or loss, right? Biglang may lumabas, 35 billion, right? So you need to understand what this is all about, okay? So anong gagawin mo ngayon? Titignan mo sa notes to financial statements, ano nga ba ang kwento behind this 35 billion na financial asset at fair value through profit or loss? Okay? If you look at your receivables, medyo tumataas yung receivables, right? Tumataas yung receivables. What is the interpretation of an increase in receivables? Okay? Receivables increase if sales increase. Tama ba? That is the usual thing, di ba? So increase in receivables might be a good thing if it is coupled with an increase in sales, right? However, an increase in receivables, pero yung sales flat, ibang storya yan, di ba? Paano tumaas ang receivables when the sales for 2020 is flat? Ibig sabihin, bumaba ang collection. And that is a cause for concern. So magme-mental note ka na when you go through the financial statement of the company. Okay? So in this case, you have to understand what happens to sales. Right? Because that will give you a lot of clue whether the increase in receivables is a good thing or a bad thing. Okay? If you look at inventories, bumaba yung inventories slightly, but it's not very significant versus the past. No? Other current assets, tumaas ng konti, pero mukhang ganun na yung trend simula 2019. Right? Non-current assets, all of a sudden, may right of use assets. Okay? Right of use assets are assets due to leases. Leases meaning nirerentahan. No? Meron siyang mga nirerentahang mga places. So those are right of use assets in the financial statements. No? And ikaw ngayon, ang gagawin mo, you try to understand bakit biglang may lumabas na right of use assets. No? Ang gagawin mo dyan, pupunta ka rin sa notes to the financial statements. Bakit kaya? Okay? And if you go to the notes, you will understand that this is because of an accounting policy change. No, nagkaroon ng change in accounting policy in 2019 kung saan they needed to capitalize those leases or put those leases in the balance sheet. That's why naging biglang lumobo yung right of use assets. Okay, so that was the explanation. What else? What else looks significant? Okay. What else looks what else looks significant? Goodwill, tumaas siya nung 2019, right? Pero ganun na rin naman eh. I mean, that's really the trend. That's really the trend, no, since 2019. Okay? Yan. And then if you look at, yun lang, no? Yun na yung nagbago. So if you look at this, parang ito biglang lumitaw, then ito biglang tumaas. Okay? Na medyo significant. Ito bumaba, significant din, so worth investigating, right? And then ito biglang nag-appear. So that's something that's also worth investigating. Okay? So, yun yung unang step ng financial statement analysis. Basahin mo muna yung FS, right? And understand saan kaya may parang interesting changes in the amounts. Let's look at the liability side. Parang okay lang naman. Okay? So, in terms of current liabilities, ito medyo nag-reduce ng short-term debt, no? But it's understandable because of the pandemic, right? They wanted to, I mean, some liabilities will be due. No? Ito, there was a senior debt security. So titingnan mo ngayon sa news. Meron bang additional loans ang Jollibee during this time? No, additional loans during this time? That's something that you will check. And you can also check it in the notes to financial statements, di ba? O ano pang titingnan mo dyan? O yung lease liabilities biglang nag-appear. No? Kapareho ng time na nag-appear yung right of use assets. So it's also related to the accounting treatment. Okay? Change in accounting policy. Then if you look at the balance sheet, ano pang may kakaibang numbers? Long-term debt, bumaba. No? What else? Ito. Retained earnings, bumaba. Right? From 23,880 to 9,871. Bakit kaya? No? And ito pa, senior perpetual securities. From zero, nagka 30 billion ng 2020. Okay? So if you look at this balance sheet without further analyzing it, okay, mukhang ang ginawa nila sa 2020 was fundraising. Right? Ano ibig sabihin ng fundraising? Ang ginawa nila sa 2020, nangalap sila ng pera. Like nag-raise sila ng pera. That's what they did in 2020. And that money actually did not increase the property, plant, and equipment. Right? Diba? Ang increase in assets napunta sa fair value through profit or loss. Okay? So para kung iisipin mo, nag-raise sila ng funding ngayong 2020 pero hindi pa nila nai-invest into businesses or into capex. No? Why? Because the increase in assets nandun sa financial assets through fair value at profit or loss. Right? These are short-term investments only, right? That's what you learned in 99.2. These are not business investments in businesses or investments in capital assets or fixed assets. Okay? And so therefore, we see that the story for Jollibee Foods in 2020 looks like a fundraising year. That's how that's what they did in 2020 with no significant investments. Okay, let's see if that's something that will will be will be seen in the further financial statements. Okay, next, Here's the income statement. So let's look at the income statement. Look at net sales. Ay, bumaba yung net sales. Right? Oops. Bumaba yung net sales. Okay? From 2019. Now, if you look at total sales, bumaba from 2019. So we know that receivables increased, right? Pero yung sales actually decreased. So ibig sabihin, ang nangyari, there were collection issues, right? Hindi na ako kolekta. And so therefore, that's something worth investigating. And we will see it in the financial ratios later. Okay? What else can we understand based on this FS? Ano pang mukhang interesting dito? Yung cost of sales, natural, bumaba. Right? Kasi bumaba yung sales. At kung naalala mo, yung inventory kanina, bumaba rin. Right? Correct. And that just matches the sales. Diba? Hindi rin sila nag-produce ng too much inventory kasi mahina ang bentahan. So that makes sense. Right? If you look at general and admin, it increased by so much, right? Correct. There was a marked decrease in promotion. Okay. And yung share in net income from their associates also decreased, right? From net income, naging net loss, which reflects the pandemic issues. Okay? And all in all, there was net loss in 2020 versus net income in 2019. Okay? So that's the performance story. Okay? If you look at cash flows, no, there were a lot of investing activities. But if you look at the notes, those investing activities are due to purchase of financial assets through profit and loss. Specifically, that's 35 billion. Okay? So out of the 40, 35 billion investment in financial assets through profit and loss, which is not a long-term asset, right? So actually, 5 billion lang ang ginasta nila for investing activities. Okay? Compare that sa 29 billion, 13 billion, 10 billion from 2017, 18, and 19. Okay? So therefore, makikita natin that there was really a halt in expansion activities as far as Jollibee is concerned. Okay? And why will there be a halt in expansion activities? Look at my cash flows from operations. Diba? From 20 billion in 2019, negative 505 million na lang. Right? Operations was not supportive enough. Right? And so therefore, yun na nga, it led to a cutback of investments. Okay? And that's why there's also a significant financing, positive 41,120, no, in 2020. Okay? This amount, yan yung 35 billion of which was invested in financial assets at fair value through profit or loss. Okay? So ibig sabihin 5 billion palang talaga ng net cash flow na yan, okay, ang nagagamit nila for expansion or for retirement of debt. Okay? So just by looking at the numbers, may istorya ka nang pwedeng mabuo. But the financial ratios that we'll talk about will further provide that story. Okay, let's look at the next slide. So here, one way to analyze performance is using trend analysis and common size analysis. So let's start with trend analysis. Basically, you look at the trend of the account. Okay, so you can determine the percentage change, no, from year of the account from one year to another. You can also look at the cumulative annual growth rate. And how do you compute it? Year n over year 0, 1 over n minus 1. Okay, so for example, no, year 1, 2, 3, 4. Okay, yung year 1, yung revenues was 100, 200, 300, 400. Okay, if you get the cumulative annual growth rate for 4 years, which is on the fourth year, what will be the computation of the CAGR? Okay, so year n, year 4. Okay, um, okay, so that's 400 divided by the first year. That's 100. Okay, raised to 1 over what? Okay, sorry. Liitan natin ng konti para magkasya. So CAGR 400 over 100. What is the exponent here? 1 over n. What is n? Okay? Ngayon, kailangan nating bilangin kung ano yung n. Is n equal to 4 here? Okay? In this case, no. Why? Because we're assuming that cash flows presented are at the end of each year. Okay? You have to consider that. Okay? So if it's at the end of year 1, so this is end of year 1 to end of year 2, diba? End of year 2 to end of year 3, end of year 3 to end of year 4, naging 400 yung amount. So the compounding period is actually 1, 2, 3 years and not 4 years. You got my point? Let me repeat that. Repeat that and rewrite it, okay, para malinis. Okay. So for example, ito yung cash flow pattern. End of year 1, it's 100. Year 2, 200, 300, 400. Okay? Ang tanong, what is the CAGR? No? The CAGR in this case is 400 over 100. Kung ano yung ending over beginning. Gaano karami yung taon? Depende sa compounding period. So, end of year 1 to end of year 2. End of year 2 to end of year 3. End of year 3 to end of year 4. So, that's 1 year, 2 years, 3 years. And so, therefore, here, the compounding is, or the exponent is 1 over 3 minus 1. Okay? You can compute that at home kung ano yung number na yan. Now, for example, if the numbers given to you is at the, for example, the numbers na binigay sa'yo is this, year 0, meaning at the start of year 1, 100, year 1, 200, year 3, 300, year 4, okay, 400, year 5, 500, and it is at the start of the year. How do you now count the number of compounding periods? Start of year 1, okay, to end of year 1, right? Kasi isang taon yan, right? So, end of year 1, sorry, mali yung bilang ko, ano ba yan? 2, 3, and 4, okay? And then end of year 1 to end of year 2, end of year 2 to end of year 3, end of year 3 to end of year 4. Okay? So that's 4 compounding periods. And how do you get the cumulative annual growth rate here? That is 500 over 100 raised to 1/4 minus 1. Okay? So that's how it is to be computed. Okay? Why is trend analysis important? Trend analysis is important because, of course, you will see trends, right? Whether it is increasing or decreasing. And also, there are certain income statement and balance sheet items that should be in conjunction, should move together, right? So for example, inventory is usually associated with increase in sales. Increase in sales is usually associated with increase in receivables. And so therefore, they should move together. They should have the same trend. Okay? Let's look at this example sa income statement ng Jollibee. No? So ito na yung trend in percentage. Okay? So if you look at net sales, no, negative 27% sa, so if you look at the trends, sales, there was a 27% decrease in sales for 2020. Okay? And overall 28% decrease in net sales. Okay? If you look at cost of sales, it reduced by 23%. So mas malaki yung reduction sa revenues kesa reduction in cost of sales. Right? So if you can imagine, kung ito sila dati noong 2019, sales, cost of goods sold, the reduction is not parallel. Okay? Hindi ganyan. No? Sharper ang decrease in revenues than decrease in cost of goods sold. And therefore, what will you expect? No? Mas magnified ang decrease in gross profit. So, ibig sabihin, hindi nag-move appropriately yung cost of sales. So, merong mga additional expenses na kailangan i-incur. Okay? If you look at general and admin, nag-increase pa by 26%. Right? If you look at advertising, nag-reduce ng 34%. So, it shows you whatever was their strategy for 2020. Preserve cash by reducing advertising. The increase in G&A, what you can do is you can investigate. Nag-increase ang G&A. Why? You can look at it in the notes, the financial statements, right? Right? What items in G&A drove the increase? Right? So it's something that you can investigate when you go to the notes to financial statements. Okay? So ganun yung para kang detective, right? The clues are in the numbers and you try to unearth what they did. Okay? And that's what financial statement analysis is all about. Okay? Next, another worthy of analysis here is equity loss in joint ventures and associates. If you remember, in your 99.2, this pertains to investments in associates kung saan there will be equity share in net income of the associate in the books. Okay? And an associate is an investment wherein Jollibee has significant influence over the entity. Okay? And if you see these numbers, it means pababa ng pababa ng pababa ang equity share, in net income of the associate. And so therefore, yung kanilang mga businesses na inacquire na associate ang classification, mukhang hindi pa nagmamaterialize. Right? Kasi loss siya ng loss every time. Okay? So that's something that you may want to investigate. You can also check the notes to financial statements. Baka merong konting storya tungkol sa mga associates na yan. Okay? So the point being is that again, these are all clues for you to unearth. Okay? Next. Next type of analysis is common size analysis or common size financial statements. What's the meaning of common size financial statements? Common size financial statements are FS din siya, pero ang ginagawa is you express the numbers, no, as relative percentages. Okay? Relative percentages. Okay? For income statement, lahat ng numbers doon is expressed as a percentage of revenue. Okay? Why? Okay, so that you can easily compare differences in trends, right? Mas madaling mahanap yung trend if you will look at it as a percentage of sales lahat. Okay? It also allows you to look at year-to-year changes, okay, and company-to-company comparisons. Okay? If kinomon size mo siya, pwede mo nang i-compare ang performance ng Jollibee sa Max's, sa Pizza Hut, right? Kasi magkakaiba sila ng magnitude. So mahirap silang i-compare. Pero kung naka-common size sila lahat, percentage expressed as a percentage of revenues, ang income statement at expressed as a percentage of total assets, ang balance sheet, then lahat sila mako-compare mo na ng mas madali. Okay? So let's look at the common size analysis for Jollibee. Okay, so this is the balance sheet, the income statement. Okay? So here, this is total sales. So all items were expressed as a percentage of total sales. Okay? So kesa number yung nakikita mo, I mean peso amounts, percentage yung nakikita mo. In here, it will demonstrate a lot. Okay? Marami kang matututunan from here. Okay? Sorry, nawala yung mga labels. This is 2020, I think. So 19, 18, 17, 16, 15, 2014. Okay? So let's look at the numbers. Okay? If you look at the trends, yung 100% yung sales, di ba? Yung split between net sales, royalties, and PFRS impact, parang pare-pareho lang more or less. Right? So in terms of the proportion of its revenue sources, it looks like it's consistent. Okay? It's not very much affected by the pandemic in 2020. Okay? But let's look at other items. Let's look at cost of sales. Cost of sales from 82, 84% usually, it now is as high as 89%. So nag-increase, 5% increase. No? 5 percentage points of an increase from 84 to 89%. Okay? And therefore, that reflected in the gross profit. There was an decrease of 5%. So ikaw, you will investigate, nagmahal talaga yung cost of sales. So you have to investigate it. Right? How? You'll check it in the income statement. You also check it in the notes related to cost of sales. Which specific item of cost of sales ang hindi ang out of the normal proportions? Then that will give you an insight what are the pain points of the company. Okay. Let's look at the numbers. General and admin. No, marked increase. So you have to understand this also. Punta ka sa notes, intindihin mo kung bakit ganyan yung nangyari. Okay? Advertising, sinabi ko kanina, di ba? Nagtitipid tayo, reduce advertising. But in reality, in relative terms, 2% of revenues pa rin yung ginastos niya. So actually, it's not very significant reduction, right? Kaya hindi nakatulong masyado sa kanyang profitability yung decrease na yun. Okay? So if you look at total OPEX is 7% higher, mainly because of general and admin. Okay. Next, interest income, no change. Interest expense, lumaki pero konti lang, 1%. That's not significant, right? No? Maliliit na yung impact ng iba eh, right? Yung changes. So therefore, if you can summarize what happened to the profitability of Jollibee, it was because of cost of sales, right? And general and admin. Those are really the material cost drivers, okay, that further disintegrated the net income of. Mm, no. Of course, hindi ibig sabihin niya ng rason lang. Kasi pag nagpunta ka kanina sa trend analysis mo, alam mo that this is also a significant driver. Net sales decreased. So, bumaba na nga yung net sales mo, nagmahal pa yung cost mo. Essentially, that's our findings on the income statement. And for you to understand why, check the financial statements of Jollibee. Okay? I won't, yung mga tinatanong kong check the notes, I will just put that in the assignment. Okay? So you have to also practice reading financial statements. So yung mga sinasabi ko ngayon na check the notes, what happened in cost of sales, tatanong ko yan sa assignment. Okay? So just be ready with that. Okay. Look at the balance sheet. If you look at the balance sheet, what happened? So cash and cash equivalents, ay nako, there was a significant reduction in cash balance. Okay? Bakit reduction? Kanina if you look at the numbers, let's go back to the numbers. Ang laki naman no, 20 to 21. No? So in absolute amounts it's higher, but relative to its asset size, actually lumiit na yung cash and cash equivalents na yan. Okay? Why? Because it invested a lot of its assets into financial assets to profit or loss. Okay? So in absolute amount, it's big, but relatively, it's small, right? Relative to the rest of the assets. It's smaller than usual. So that's something worth investigating also. Although we note that 17 billion is in liquid assets or assets that's easy to sell, which is financial assets to profit or loss. Okay. Next, although we say that receivables was bad news, in terms of relative impact, actually, hindi siya ganoon kalaki ang impact. Right? 3% pa rin ang receivables ng total versus total assets. So what really changed in terms of the composition of its current assets is this. You know, investments in financial assets to profit or loss, which arises from its fundraising activities. Why do I say that? Diba sinabi ko na yung mga fundraising activities na yan, okay, what happened there was they issued, nag-raise siya ng debt and equity. At yung perang na-raise niya, nakalodge dito sa financial assets to profit or loss. Okay? Next, so if you look at investments, if you look at PPE and right of use assets, actually nag-reduce sila, no, in 2019 and 2020. Okay? Which drives the fact that the increase in assets is actually driven by this investment in fair value to profit or loss, which is actually a low return investment. Okay? So makikita natin, baka may impacto sa efficiency of the company. Right? Kasi may asset siya pero it only provides low returns. Okay? So now let's go to financial ratio analysis. Okay, so we now go to financial ratio analysis. So what's financial ratio analysis? It is used by both managers and investors. Essentially, ratios are computed to determine relationships between financial statement accounts. So kanina, ratio din naman yung trend, di ba? May numerator, may denominator. Ratio rin naman yung common size. There's a numerator, there's a denominator. But in our context, financial ratio analysis in this case are ratios which determine relationships between financial statement accounts. Okay, so it could be an income statement account in a balance sheet account, or two balance sheet accounts, or even two income statement accounts. Okay, so the point being, those relationships may be stable over time. And so looking at these relationships will give us an idea of what the changing circumstances of the firm is. No? Uses of financial ratios typically involve comparisons. So a financial ratio is only relevant if there's a comparison, make a compare. Okay? So for example, may isang ratio na sabi 0.5 ang na-compute mo. Yung 0.5 na yan, kung walang ka-compare na benchmark o kaya historical, no? O kaya peers, based on peers, kung ano yung ratio ng kanyang mga competitors, no? The financial ratio is useless, right? Kasi hindi mo ma-interpret, okay ba yung 0.5? Kasi kailangan mo malaman nag-i-improve ba or hindi. Is it at par versus benchmark? Is it at par versus peers? Better or worse than peers? So always financial ratio analysis involves comparisons. Okay. So types of ratio comparisons. Number one is cross-sectional analysis. It is a comparison of different firms' financial ratios at the same point in time. So same point in time, different companies. We call that a cross-sectional analysis. For example, in our case, Jollibee, pag kinumpare mo siya, and Jollibee na numbers from 2014 to 2020, okay? JFC, okay? If you compare 2014 to 2020 of Max's, Shakey's, and other quick service restaurants, then you're doing a cross-sectional analysis. So ang analysis ngayon is yung numero ba ng Jollibee better or worse than its benchmarks, its its other firms within the same industry. Okay? A benchmark analysis is that it is a type of cross-sectional analysis. Okay? But you are trying to compare it with a key competitor or with a group of competitors. Okay? Kasi dito, the idea is all industry participants. Yun yung cross-sectional analysis. Benchmarking is with specific competitors so that you want to emulate. Time series analysis simply means that the comparison is across time. So it's the same firm and the ratios are computed over time. And so meron kang pattern na pwedeng makita. And of course, combined analysis. Okay. You can combine cross-section and time series, benchmarking and time series. Okay. Let's look at the different kinds of ratios. One is the liquidity ratio. So liquidity ratio, when we talk about liquidity, we are talking about or referring to the firm's ability to satisfy its short-term obligations as they come due. Ability to pay obligations or liabilities. Okay? What are the key ratios related to liquidity? If you look at the key ratios related to liquidity, it's current ratio, quick ratio, and cash ratio. Okay. Current ratio, the formula is current assets over current liabilities. So what are current assets? The cash and cash equivalents, AR, right? Inventory, prepayments, and all other current liabilities, assets over current liabilities. Okay? The idea being, since current assets are the ones that expected to be converted to the cash within the near term or within the operating cycle of the company, then that could be used to pay off the current liabilities. Okay? So you want this to be greater than 1, right? Kasi pag below 1, ibig sabihin the current assets that you have is less than the liabilities that will be due within a year. Okay? So that's a usual benchmark. Okay? But different industries will have different current ratio benchmarks. Okay? Meron kasing mga industry na cash talaga ang labanan, meaning kailangan maraming liquidity. Halimbawa, casino, right? Or gambling, or nasa casino yung company mo, right? Or gambling company, right? So, marami ka dapat current assets, right? Kasi maraming cash dapat na mag-circulate, no, within the casino. So, mataas ang normal level of current assets doon. Okay? So, although the usual benchmark is 1, it can also change from company to company or industry to industry. Okay? Quick ratio. Okay? It is current assets minus inventory. Actually, dadagdagan ko to. Minus prepayments over current liabilities. Okay? In other words, ang laman lang niya, cash and cash equivalent, no? Short-term investments at saka receivables. So para siyang mas strict lang na current ratio, right? Because we excluded inventory and prepayments. Kasi kung tutuusin, medyo mas matagal pa bago maging cash yung inventory and prepayments, right? Ang mas madaling i-convert to cash is short-term investments. Pwede mong ibenta sa market yung short-term investments mo, right? And receivables. Kasi yung receivables, kukolektahin mo na lang, cash na. Okay? The strictest form of liquidity ratio is cash ratio. No? Na cash equivalents lang ang numerator over the denominator. Okay? So this is the most conservative measure. Okay? Right? Because this is the amount of cash that you really have on hand. Pero hindi naman kailangang more than 1 to. No? No need. No? Kasi yung current liabilities mo, although liability mo yan ngayon, may schedule of payment yan. It's not necessarily that you will pay everything now. Right? No? Pwedeng liability pero may schedule of payment kasi. So hindi pa naman ngayon na, but in 2 months, in 3 months, in 4 months, those are all current. So you don't need all the cash now. So that's why usually we look at these 2 ratios. Okay? So let's compute for Jollibee. For Jollibee, kinumpute ko na. Okay? So here are the liquidity ratios. If you look at this calculation, no, actually nag-improve ang current ratio ng Jollibee sa 2020. Because remember, in 2020, they had a lot of they had a lot of financial assets through at fair value, through profit or loss. Right? Specifically, 35 billion. Right? And this is a current asset. So it boosted its current ratio. So actually, kahit wala pang pandemic, mukhang plano na nilang mag-increase ng funding. Kasi yung current ratio nila, 0.7 na lang. So they need to raise cash. Okay? Because their current assets is less than their current liabilities. Okay? So mukhang 2019 pa lang, plano na talaga nilang mag-increase ng funding. Okay? So, because if you see the trend, pababa na talaga. 2017 pa lang. Right? 2017 pa lang, pababa na talaga yung trend. So that's why I'm sure 2020 was really their fundraising year. Okay? So that's how we interpret those ratios. Okay. Next are activity ratios. Activity ratios, sometimes there are called efficiency ratios. No, they measure the speed with which various accounts are converted into sales or cash or inflows and outflows. Okay? So, speed ng conversion to cash. Okay? So, what are the usual three measures of speed of conversion into cash? First is the accounts receivable days. Okay, sometimes it's called the days sales outstanding. Now, sometimes it's called the average collection period. So maraming tawag sa kanya. Depende sa book. Okay? How do we then compute the average accounts receivable days? Okay? So accounts receivable days is the balance of receivable divided by the average daily sales. Okay? Kung tutuusin, kung okay, 365 ang receivables mo, 365 pesos ang receivables mo. Okay? At meron kang sale na piso sa bawat araw, right? It means that it will take you 365 days to collect everything. Okay? That is the interpretation. And to compute for average daily sales, you simply get the annual sales and divide it by 365. Of course, 365, pwede ring 360, pwede ring 270. 270, I think, is the working days in the Philippines, or 272, yung working days in the Philippines. But any of this is okay, right? But the most precise is 365. 360 is also accepted. And if you want to consider to exclude weekends, I think that's 272 days. So okay lang yun. In the exam, we'll mention kung ilang days. Okay? Or kung silent, assume it's 365 days. Okay? Now, AP days, ganun din yung principle ng calculation. Yung AP balance, okay? Balance ito AR balance, AP balance, over average daily payments. Okay? And average daily payments is annual payments over 365. Ano yung payments here? Okay? Payments here is yung mga accounts in the income statement na dumadaan or booked as AP. Okay? Booked as accounts payable. Okay? Kasi for example, salaries. Kung yung salaries hindi pumapasok sa accounts payable, hindi mo siya dapat isama sa average daily payments at dito sa annual payments na to. Okay? Yun lang nabubuk sa AP. So pwedeng cost of goods sold, right? Or other expenses plus other expenses booked as AP. Okay? So that's how we will define annual payments here. Okay? So same principle. And lastly, inventory days. Okay? Inventory days is average inventory balance over daily cost of sales. Okay? Or cost of goods sold. So annual cost of goods sold divided 365 is the average daily cost of goods sold. Okay? So makukuha mo yan days, right? In days ang makukuha mong sagot dyan. So makukuha mo is ilang days. Say kunyari 40 days ang collection. Okay? Ang AR, ilang days. For example, 20 days at 40 days ang AR, 20 days ang AP, 30 days ang inventory. So that's yun yung magiging output niyan or outcome. Okay? Another measure of activity is the activity ratios. Another measure for activity ratios are the turnover ratios. Okay? Yung turnover, ang interpretation yan, ilang beses sa isang taon na fully collect ang receivables. Ilang beses sa isang taon na fully pay ang accounts payable? Ilang beses sa isang taon na fully sell ang inventory? So parang ganun yung interpretation ng turnover ratios. Okay? So, ang formula niya, so for example here, the formula is the annual for AR turnover is annual sales over average accounts receivable. Average what? Bakit siya naging average? Average to beginning balance ng receivable plus ending balance over 2. Okay? So, ganoon lang siya. So, pag average accounts payable, beginning balance ng AP over ending balance ng AP over 2. So, ganoon siya kino-compute. Okay? So, AR turnover, AP turnover, and inventory turnover. Okay? So, madali lang siyang computein. Yung latter two is fixed asset turnover. Okay? And total asset turnover. Medyo mahirap siyang intindihin in terms of ilang beses na kukolekta or ilang beses nagagamit kasi unlike AR, AP, and inventory, may movement talaga within a year. Right? So yung AR turnover, for example, ilang beses na kukolekta fully in a year. Right? So madaling intindihin. Pag sinabing 3 times, ibig sabihin 3 times a year, ubos ang inventory, ubos ang AR, na-collect lahat. Pero yung fixed assets, hindi siya maisip that way. Right? So siguro, mas madali na lang isipin na yung fixed asset turnover, it is a reflection of the revenue generating capacity of the asset. Okay? Kasi if you look at the formula, fixed asset turnover is sales over fixed assets. So sales over assets siya, di ba? So pwede mo na siyang ma-interpret na magkano ang sale for every peso of assets that you invested. No? From every peso of fixed assets that you invested. Pwede mo rin i-interpret yung asset turnover naman, total asset turnover as sales over total assets, right? So for every peso of investment in total assets, magkano yung sales na nade-generate niya? Okay? That's how you can interpret this. So sales generated per peso of investment. Investment in fixed assets and investment in total assets. Okay. Ito naman, how many times a year, okay, do I roll over my AR, AP, and inventory? Okay. Let's look at some numbers so that it's easier to understand. Okay, so here are the activity ratios or efficiency ratios of Jollibee Foods Corporation. So in terms of activity ratios, let's look at the turnover. Okay, ano ang interpretation ng accounts receivable turnover? It means in a year, okay, in a year, 23.7 times na i-empty yung accounts receivable balance ko. Okay? Right? So kumbaga in a year, 23 times siyang fully collect. So therefore, the higher the AR turnover, that's better. Right? Tama ba? Kasi imagine if your AR turnover is 50 times, ibig sabihin you're collecting faster. Kasi nauubos mo yung AR 50 times a year. Nakukollect mo yung AR 50 times a year. Okay? Now, if you look at the trend of AR turnover, 32, 34, 33, all of a sudden, 23 times. So bumaba yung number of times na nauubos mo yung inventory, ay nauubos mo yung AR through collections. Right? And so therefore, cause of worry yan. Ibig sabihin there is a collection issue that needs to be resolved. Okay? Inventory naman means how many times a year nauubos yung inventory mo. Okay? So, from 16, 15, 15, naging 14. Medyo bumaba, konti lang. Right? No? So, di ba alam nating mahina ang sales? Slower sales? Ibig sabihin, they were also able to manage inventory in such a way na hindi rin sila nag-produce ng marami. So, pag binabaan mo yung level of inventory, mahina ang sales, then yung number of times na mabibenta mo yung inventory in a year, makakabenta ka or makaubos ka ng inventory in a year will be maintained. Okay? Right? Because inventory turnover is cost of sales over average inventory. Okay? Kung bumaba yung absolute amount ng cost of sales, you can maintain it, bababaan mo rin yung inventory levels. Right? And so therefore, you are maintaining the same efficiency as before. Okay? And in accounts payable, mukhang ganun. Wala ring change. Okay? They paid as usual to their to their suppliers. Okay? And actually, that story is also reflected in the days receivable. Okay? When you compute the days receivable here, no? Days receivable in this case went up by 4 days. Okay? And that was the reason the collection period was delayed by 4 days. And it added to the receivable balance. Okay? If you look at inventory naman, the days is just 2 days. So konti lang yung adjustment. Days payable is 35 and 37 days. Okay? Now, let's define two terms, which is the operating cycle and the cash conversion cycle. The operating cycle is simply receivable days plus inventory days. Okay? In other words, gaano katagal yung pagbenta mo at saka pagkolekta mo. Okay? That's how long you are, that's the length of time to generate cash. How do you generate cash in a business? Magbenta ka ng inventaryo, tapos mangolekta ka ng inventaryo mo. Right? Okay? So, ibig sabihin nun, if you look at that, medyo humaba yung days na yun. Naging 42 days yung cash generation period nila. Cash conversion cycle naman is operating cycle, which is the 2 minus days payable. Okay? Cash conversion cycle means na how much sila, parang cash, gaano kabilis yung ikot ng pera. Okay? Cash conversion from sale to payment. Okay? Kaya mina-minus yung days payable. Okay? So if you look at the trend, actually 0 days sila. Okay? It means the amount of days that I need to generate my cash, okay, is equal to the number of days I need to pay my accounts payable. So 0 operating cash conversion cycle means bawal magkamali. Right? Diba? Okay. So pag negative yung operating cycle, it means na pag negative naman yung operating cycle, ibig sabihin mas mabilis silang mag-generate ng cash kaysa mag-pay. Okay? So what happened in 2020? Okay? Mas mabagal na silang mangolekta ng maka-generate ng cash kaysa sa bayad. And so therefore, may 5 days ng cash conversion cycle. Okay? So that's the interpretation of that number. Lastly, fixed asset turnover and total asset turnover. So for the fixed asset turnover, cash generation ability ng investment mo in total assets and fixed assets. So obviously, bumaba siya kasi bumaba nga yung sales ng 2020. Okay? So you can see that it deteriorated, but 2019 pa lang nagde-deteriorate na siya. Okay? Next is solvency ratios. So solvency ratios are ratios related to the long-term ability to repay long-term obligations. Okay? So we talk about financial leverage, it refers to the magnification of risk and return through the use of fixed cost financing, such as debt and preferred stock. So financial leverage simply means the presence of debt no, or preferred stock. Okay. So, but primarily debt. Okay. And the degree of the indebtedness is the measure of the amount of debt relative to other significant balance sheet amounts. Okay. What are the ratios here? The ratios here are the debt ratio. Debt ratio is total debt over total assets. Debt to equity ratio, total debt over total equity. So those are all related to the degree of indebtedness. Okay. The higher this amount, ibig sabihin, most assets will be financed by debt rather than equity. Okay. The maximum debt ratio is 100%, right? And that is impossible kasi hindi naman pwedeng mayroong kumpanya na 100 debt, 100% debt, walang equity. Okay? And then the latter two, debt service coverage ratio and times interest earned ratios, are measures of ability to pay liabilities. Okay? So if you look at the debt service coverage ratio, that is EBITDA over interest plus principal. So EBITDA is earnings before interest, taxes, depreciation, and amortization, is supposed to be your sources of cash, right? So, yun yung cash na generate ng business. So, divided by interest over principal. So, if your EBITDA is higher than that, ibig sabihin, meron kang enough cash generation para pambayad ng interest and principal. Yung times interest earned lang, EBIT over interest. So, kumbaga, para siyang mas narrower version of the debt service coverage ratio. Kasi yung EBIT, yun yung na-generate na cash, no? Before paying interest and taxes, no? And then ang denominator, yung ibabayad ng interest. Okay, you also want that to be greater than 1. Okay, kasi pag greater than 1 yan, ibig sabihin, may enough siyang pambayad ng interest or principal. No? And that's what we would like to achieve. So for JFC, what was the leverage ratios? Ito siya. So if you look at the debt ratio, no, tumaas na siya to 0.72 times. Ano ibig sabihin yan? 72% of the assets is financed by debt. Medyo mataas na yon by industry standards. So that's why when they raised funding in 2020, hindi lang debt, merong equity. Right? And because of that, bumaba yung debt ratio niya to 0.68 times. Okay? But probably that's still high versus the industry. No? If you look at the debt to equity ratio, ganun din yung kwento. Right? The debt to equity ratio increased in 2019 and decreased in 2020 because of the fundraising activities in 2020. Now, if you look at debt service coverage ratio and times interest earned, that is where the issue is, right? If you look at 2020, it was negative. 2019, it was below 1 for debt service coverage ratio. So medyo problematic na. And it is something that's worrisome for lenders. Okay? The last set of ratios are profitability ratios. So essentially, they describe the profitability of the firm. Okay, so gross margin is gross profit, which is sales minus cost of goods sold over sales. Operating profit margin is to operating profit over sales. Operating profit is equal to EBIT. Okay, which is earnings before interest and taxes. NPM, or the net profit margin, is net income minus preferred dividends over sales. And those are the main profitability numbers. Of course, you can still analyze parang pag tinignan mo kasi yung common size financial statements, nandun na rin yan lahat. Right? If you go back to common size financial statements, okay, nandun na rin yan. Gross profit here is 11%. Right? Ano yung 11% na yan? Cost, sales, minus cost of sales over sales. Right? This is gross profit over sales. So ito na yon. This is the gross profit margin. Ito naman, operating income, right? Operating income over sales. So this is called the operating profit margin. Ito naman sa dulo, net income. That's net income over sales, 10%. So that is the net profit margin. Okay? So, naaral na natin siya kanina. Okay? Now, the other set of uh, profitability ratios are return ratios. Gusto nilang i-measure kung magkano yung kinita versus the investment. No? So for example, the first one, return on assets is operating income over total assets. Okay? So operating income simply means operating income over total assets. So return on assets specifically means na ito yung kinita ng pisong investment ko sa assets. Okay? Pag kinompute mo yan, di ba operating income, magiging ganito yan. Okay? Kung magkano ang operating income na na-generate ng piso na investment ko sa total assets. Right? That's how it's going to be interpreted. Okay? So kaya siya return measures kasi magkano yung ibinalik sa akin ng investment kong piso in total assets. Okay? For return on equity naman, net income minus preferred dividends over total equity. For every peso of equity that was invested, how much net income did I generate? So that's why it's called return. Balik. Magkano ang balik sa atin? Okay? And lastly, earnings per share. I know you already discussed this in 99.2, but it's simply the net income to common shareholders divided by the number of shares outstanding. So per share naman ito that was invested. Okay? Now let's look at Jollibee's numbers. So if you look at profitability, no, bumaba by 5% ang gross profit margin. Okay? Bumaba by 13% or 14% ang operating profit margin. Bumaba by 9 plus 4, 13% ang net profit margin. Okay? So kung tutuusin, yung decrease ng profitability na 5%, no, ibig sabihin cost of goods sold yung may problema. Ito, lumala lalo yung decrease in operating profit margin. Ibig sabihin, merong item below gross profit, no, na mas malaki yung naging impact, no? So in that case, this is admin cost. Okay? And from operating profit to net profit, wala na masyadong change. 13% na uli siya. Okay? And if you look at the cost of goods sold, particularly, okay, kung titingnan mo dyan, okay, malaki ang in-increase ng personnel cost and rental costs. So yan yung rason kung bakit bumaba ang aking gross profit margin. Okay? If you look at OPEX, ayan, general and admin ang may kasalanan. Okay? And that's the reason why there was a decrease in operating profit margin. Okay? A good framework for analysis is what's called the DuPont analysis. Okay? The DuPont analysis simply provides an organized explanation, no, on the return on equity of a company. Okay? If you look at this, return on equity is net income over total equity. Okay? But actually, we can get ROE by doing this. Okay? We can compute net income over sales times sales over assets times assets over equity. And it will give you cancel. It will give you net income over equity, di ba? Which is return on equity. Right? So again, no? Again, so return on equity is net income over equity, but you can actually rewrite that into this, net income over assets net income over sales, sales over assets, assets over equity, and then magka-cancel-cancel. And then the result will be net income over equity, which is ROE. Okay? Right? If you write it this way, actually, itong bawat item na to, meron silang meaning. Okay? Net income over sales, hindi ba parang net profit margin yan? Right? Correct? Sales over asset, hindi ba parang total asset turnover yan? Sales over asset is parang how much sales per peso of assets invested. So hindi ba parang total asset turnover yan? Leverage is asset over equity. Di ba reciprocal yan ng debt to equity ng debt ratio? Okay, so reciprocal of debt to equity, debt to asset ratio or debt ratio. Okay? So actually, parang kinategorize na yung themes ng what makes ROE. What should you do to improve ROE? Kasi yung una nating measure, NPM, okay? Actually, parang related yan sa profitability, di ba? Second measure natin, total asset turnover. Actually, related yan sa efficiency of a company. Yung third natin is reciprocal ng debt ratio. Actually, related yan sa leverage of a company. So if you want to improve ROE, what are your levers? You have to improve profitability, improve efficiency, and use leverage. Okay? So if you want to further analyze that, okay, yung net income is this. Diba? Net income is sales minus OPEX minus SG&A minus interest minus tax divided by sales. If you further compute that, no, then ito yung makukuha mo. Right? So for you to improve profitability, you improve these ratios. Operating OPEX over sales. If you lower this, then it increases this, which increases ROE. Okay? If you lower interest expense, it increases net income, increases ROE. Okay? Well, let's go to efficiency. If you improve AR turnover, okay, so increasing the AR turnover means you are collecting more faster, collecting faster, right? Increases its efficiency, right? And so therefore increases return on equity. Okay. If you use more debt, okay, if you use more debt, then this ratio increases. Therefore, ROE increases. So it gives you a good framework of analyzing the return or decomposing the return on equity of a company. Okay. And let's look at the impact in JFC. So looking at the DuPont analysis, ito yung itsura niya, no? So the return on equity of the company actually started decreasing from 2017 and plunged to negative 18.6% in 2020. What was the reason why that happened? Obviously, profitability for 2020 was down. Okay? But yung 2017 to 2019, if you can see, bumababa na yung net profit margin niya in the first place. Okay? And it is coupled by a reduction in asset turnover. Okay? No? He was trying to offset it by increasing leverage. No, they were actually trying to offset that decrease by increasing leverage, but it's not enough. Right? So, yun ang storya ng return on equity composition ng company. Okay? So, starting 2017, they started parang nagre-reduce na yung profitability nila and efficiency in 2019. They tried to keep up with ROE, no, by by increasing leverage, no, and that tempered the decrease in ROE, no, but eventually hindi na kayang mag-keep up, no. And in 2020, obviously the pandemic had a very strong impact, no, on profit and efficiency. And that was the reason why the return in equity was was reduced that much. Okay? So that was the composition of the ROE. May storya na yung return on equity trends. Okay? Okay. Some cautions about ratio analysis. Okay? First, ratios that reveal large deviations from the norm merely indicate the possibility of a problem. Okay? So, ratios, kunyari, di ba sabi natin, the higher the turnover ratios, the better. Biglang may isang taon, biglang bumaba yung turnover ratios na malaki. It doesn't mean na may nangyari na agad na masama. Right? You have to investigate what was the reason behind the decrease. Okay? So it's a possibility of a problem. You still need to do your research. You still need to read the financial statements, read the notes to better understand why that happened. Okay. Another caution is a single ratio does not generally provide sufficient information for which to judge the overall performance of the firm. You have to have a full analysis of the ratios. Ratios being compared should be calculated using financial statements dated at the same point in time during the year for comparability. It is preferable to use audited financial statements because audited financial statements have been audited and therefore assured by the auditing firm that the information there are not materially incorrect. Okay. The financial data being compared should have been developed in the same way, and results can be distorted by inflation, of course, right? Because historical cost accounting ang nasa books ng companies. Okay. Some other caution about financial ratios, time series analysis, be aware of structural shifts in a company. Examples, mergers and acquisitions. So pwedeng the reason behind the lower profitability of Jollibee, for example, was they had an M&A in 2018 and 2019. Meron silang biniling kumpanya and therefore there were significant shifts in the nature of the company. So baka hindi comparable yung previous results niya sa current results kasi iba na yung itsura ng business. Okay? In identifying benchmarks, of course, we want to identify the right benchmarks for meaningful comparisons. No? And you want those comparable companies to be really of the same size or of the same characteristic as the company that you are studying. Okay. What are some red flags that you should take note, in financial statements analysis? Number one, earnings problems. So analysis of earnings, which is yung ginawa natin sa common size financial statements. Okay, because trends might be red flags that there is something fundamentally wrong. They are only red flags. You have to understand the business rationale. Okay. Decreased cash flows. Okay, cash flows validates earnings. A big red flag in financial statement analysis is net income keeps on increasing, but operating cash flows keeps on decreasing. How can that be? Right? Cash flows might not have the same timing as earnings, pero in the long run, they should approximate each other. So kung delayed man, makakahabol din. Pero kung 10 taon na, hindi pa rin nakakahabol yung cash flows from operations, then that is a red flag. Okay, that there could be something wrong in the financial statements. Too much debt, of course, is a red flag. And how do you say that it's too much debt? You compare it against benchmarks, against time series, or against cross-sectional comparisons. Inability to collect receivables, a deteriorating collection period is a big red flag, as well as buildup of inventories, because, of course, you need to collect receivables and to sell inventories to be able to prove that a business is viable. So if weak ang collections at mataas ang build-up ng inventories, then that is worth looking into and further investigating. So there, I think all in all, financial statement analysis is an art. You compute the numbers, but how you piece them together depends on your understanding of the industry, understanding of the news surrounding the company that you're analyzing, and understanding of the notes, the financial statements. And from there, you can make a cohesive story of what the company is all about and what the company is doing, whether it is a good investment or not. Okay? Okay, that's it. Thank you.